Hello, everybody. It's me, Shondi. All right. So today is lesson number three, and lesson number three is about liquidity and how it is supposed to be viewed. Okay. So I'm gonna keep this short. So I decided, making PowerPoint presentations, and then at the later part of the video to move to the charts. All right. So yeah, let's begin. All right. So buy side liquidity. All right, so when we talk about buy side liquidity, right, this is how I view it. Obviously, the normal smart money trader who is aware of ICT concepts and whoever's concepts, we understand that, or you guys understand that liquidity is above swing highs and below swing lows. Okay. Now, you also have to consider the fact that liquidity above chart patterns also exist. Okay. Now, these liquidity pools above chart patterns or buy side liquidity pools above chart patterns, right? They will be induced only if price is in an incorrect range valuation. Okay, for example, if buy side liquidity exists inside of discount inside of that given range, and remember, we spoke about ranges in lesson number two, when we do number two, right? So whenever price prints chart patterns, let's say chart patterns or small bodied candles, let's say, yeah, it's technically liquidity. So that's liquidity waiting to be induced. Okay, it's liquidity waiting to be induced. And the only time that they are kind of protected is when there is a continuation profile going on. Now, I'm never going to teach continuation profiles in public. It's all in the private group. All right. So the only time liquidity like that is protected, chart pattern liquidity like that is protected, is only when it's a continuation profile. Now, once that continuation profile ends, that is when these chart patterns, which exist inside of an incorrect range valuation, buy side liquidity pools, they get induced, they get taken out. You do not want to have your positions there. Okay, you do not want to keep your positions inside these chart pattern ranges. You want to be keeping your positions, for example, a sell when it comes to buy side liquidity, you want to be selling inside of premium. You do not want to be selling just below equilibrium. You do not want to be selling inside of discount. Okay. Now, I don't like trading continuation, so I most of all trade reversals, right? So these chart patterns. Okay. Now remember, when we talk about retail, when all these fellows on YouTube, Instagram, whatever form of social media, when all of these guys speak of retail traders, right? They are not any different. I am not any different. Okay. I am not any different to a retail trader. I am a retail trader. Do you have millions and trillions of dollars to move the market? No. If you do, good job. But that's not the case, right? We don't have that level of money. Therefore, we are not smart money. All right. We are just kind of well informed, but we lose as well. Okay. We are retail traders. All right. We are retail traders. Now, if you draw the line between retail traders that trade smart money against retail traders that trade support and resistance and all that other stuff, then yeah, you can say that, these people stops are there, these people stops are here. But remember, we are all retail. Okay, if you trade with the discount broker, even if you trade with a regulated broker, you are still freaking retail. Okay, so what level of liquidity rests above highs? It's liquidity that belongs to larger funds, banks, and other entities. Okay, it's liquidity that belongs to large banks, larger funds, and other entities. Now, these entities can also be central banks, can be the Fed, can be the Bank of England, whoever, right? That processes orders, that leads to order inflow into the algorithm. Okay, that leads to order inflows and outflows into and out of the algorithm. Okay, that's buy side liquidity. So now when we talk about sell side liquidity, it's the opposite. So it's basically the liquidity that's below swing lows. All right. And now when it comes to chart patterns over here, okay, when you are looking to buy, okay, chart patterns that exist inside of premium, okay, chart patterns that exist inside of premium, which is inside of the range that you are valuing, right? If they exist inside of premium, it is an incorrect range valuation, and the stops over there are going to get induced. So the stops inside of premium, the sell side liquidity inside of premium are going to be induced to get into discount, and then create a sustained price move to the upside. Okay, let me repeat. Chart patterns existing inside of an incorrect range valuation. The stop losses or the sell side liquidity below these chart patterns, right, inside of premium, will be induced just so that the algorithm can take price into discount, into a fair value gap, imbalance, order block, another point of interest that you call your own. One of those price will go into that, and then it's going to go higher, targeting buy side liquidity. Okay, so it's from sell side to buy side to sell side. Okay, and again, as always, these are liquidity pools that belong to larger funds, banks, and other entities. Okay. Now, why is liquidity generated all over the place? Okay. Now, I'm just going to talk about these points. Okay, I'm just going to regurgitate these points. So, to have a reason to revisit these price levels at a later point of time in order to neutralize positions and move inside of current order flow. So, what I mean by this is, if liquidity, all right, if liquidity is generated, let's say buy side liquidity is generated at the wrong valuation, price, okay, price is gonna go into that liquidity pool to induce them, just so that they have that so-called juice to continue to the downside, meaning going up to induce buy side liquidity just so that they can fall down. Okay, then for a buy side example, it's going down to induce sell side liquidity, which is at the wrong valuation, just to go up. Okay, going down inside of sell side liquidity, so going down below sell side liquidity to induce these liquidity pools, and then using that liquidity to lead to a sustained move to the upside. Okay, now the second reason is to have a reason to continue inside of current order flow by inducing early positions due to the unfortunate misinterpretation of price given by indicators and patterns. Now we all know hedge funds, right? They don't, some of them don't know what, some of you all know. Yes, they can see stops and all that, but they are still going to use moving averages. They're going to use indicators. They're going to use that, this and that, this and that, to generate trade ideas, to generate trading signals. Okay, and unfortunately, sometimes the indicators, everyone see the same indicators, right? In a hedge fund, all the traders, like for example, if they trade the same strategy, they are all going to see that same signal. Then they're going to put a lot of money behind it, right? Not the amount of money you and I put behind it, but hedge fund level, that's significant, right? They're going to keep their money behind it, and as a result, they're going to enter. So once they enter, they're going to have a large concentration of stops. For example, if it's a buy signal, it's going to have a large concentration of stops below that particular swing low. Now, what if that swing low, okay, what if that swing low exists inside of a premium of a range that was yet to be broken? Then what is that? That is a swing low that exists inside the wrong range valuation, inside of the incorrect range valuation, right? You want to see the swing low form inside of discount, so you can use whatever point of interest is inside that range to buy. Now, don't get me wrong. Indicators work. They work at the right valuation, not at the wrong ones. Okay? They work at the right valuations and not at the wrong ones. Now, if they work at the wrong valuations, it's because somehow it caught a continuation. Now, because it caught the continuation does not mean that it's not going to get stopped out. Once that continuation profile ends, price is just going to go back up or down to where their position was, and it's going to neutralize their stops almost instantly, guaranteed 100%. Okay. Now, if it's on the higher time frame like H4, daily, weekly, then it's going to take some time. It's going to take a couple of weeks, going to take a couple of days, going to take a couple of months, right? So we're focusing on intraday trading. Okay, but obviously fractal nature you can apply to the higher time frame as well. All right. Where will liquidity be created to be taken from? Okay. Read this. Above highs that have medium to large wicks followed by displacement. Below lows that have medium to large wicks followed by displacement. Above below structural traps. It's the topic for the advanced insight series, so it's somewhere down the line. Above or below small and tightly wound candles. So there are small bodied candles, wiki candles, right, that show a tight consolidation. Above or below consolidation variations, consolidations don't always happen at the same rate or at the same way. They don't look the same most of the time, so they're going to be different, right? So you're focusing on wiki price action. When you see a lot of wiki price action, it means that that's liquidity being generated, and you do not want to be taking part in those moves. Yes, you can have a winning trade, but you do not want to stay in that trade for a long time. Okay. And again, at the wrong range valuation, that is what we are used to. Now combine everything that you see, okay, from the top part over here, from the above area. So this 1, 2, 3, 4, 5, right? And you insert this logic into the wrong range valuation. And that should unlock something for you in terms of looking at structure and liquidity. Okay, this way you can focus on points of interests, right? That doesn't really fake you out that much. Okay, where will price react from majority of the time? Focus on previous day high and the previous day low. Now that's all I'm going to give to the public, right? Obviously there are more external liquidity pools that you can consider, which I consider on a day-to-day basis, right? You can assume whatever you want to assume. You can comment it. I don't care. If it helps you, good for you. But I'm not gonna talk about it on YouTube because I need to be fair to the guys that paid me, to the guys that are in my mentorship. All right. And also I might have a plug at the end of the video, which is something I'm considering. So stay till the end. Okay. All right. Now we look at examples. Okay. Now when we talk about examples, right, let's go to TradingView. All righty. Can you guys see my TradingView? Yes, you can. All right. So now if you look at TradingView, okay. If you look at Euro USD, that's Forex. So Forex is the most manipulated pair, right? Or not the most manipulated pair, it is the most manipulated market. Okay. I'm going to show you a few examples, maybe 3 days worth of data. Okay, let's use these 3 days. All right. Hindsight, pure hindsight. Okay. Let's make it easy so that you guys can do the back testing and you guys can do the hard work. Right? I've done the hard work. So now it's your turn. Okay. All right. Look at this high here, this Asian high over here. Price takes it out. So what can we see? Now there is a delivery state that has been changed. Price goes higher, meaning that we are now bullish. Okay, we are now bullish. Now if you zoom out a bit, okay, if you zoom out, this is the high that was broken, right? Over here, this is the high that was broken. Price goes up, comes down one more time. Okay, and you can see that we took out structure again. But you see, we are taking out structure. All right, we are taking out structure while price never made it back into at least equilibrium. Okay, while price never made it back to at least equilibrium to lead to a move up. Okay, so what you're going to do is remember the last video, lesson number 2. Take this high to this low right here. Price goes down. Where is it? Premium. Is that a candidate for inducement or for liquidity grab? Yes. What happens? You can trade this move. The next day, you can 100% trade this move because it is an inducement. Okay, it is an inducement. So when you have this low and when you have a point of interest right below it, okay, over here, that's a buy. No problem. That's a buy. But now look, we still never made it back to this discount, right? We still never made it back to this discount area. What's happening now? So we broke market structure again. What's our target now? This Asian low. Why? Because we want to see price try and reach discount or equilibrium, one of the two. Okay. Now when it takes this low out over here, and when price changes its state of delivery, 100% there's a buy. Now you might say, Sean, come on, it's not in discount, man. Come on. Yeah, it's not. But you can buy under the assumption that price is going to try and come back here anyway. Okay, you can keep on going about your business all the while knowing that whenever price finally does change its state of delivery, whenever Euro USD is primed to come down over here, this low over here is a guaranteed 100% guaranteed target. Because for example, if the dollar index is bullish for let's say a weekly expansion, you could see price coming down all the way here, and this is a point of interest. So this equilibrium into discount over here, that's a point of interest. Maybe this bullish order block here, or it's a propulsion block. I think, yeah, it's a propulsion block. You can use this, and you might get a reaction. Not you might, you will. Okay, even though price can have a significant change and completely reverse, you will still get a reaction from here. It's a tradable bounce. Okay, if it's bearish, what to do? It goes up, gives you a tradable bounce, and then reverses. You can't help it, right? So it's all about price action and how you react to it. Okay, so this is one example. Let's move on to the next example. Over here. All right. So we effectively saw these 2 days. Look at this. Okay, so you can see that we have stop fund here, and now price broke market structure. Okay, so for now we are bullish. Okay, for now we are bullish. It's a continuation. Now with this bullishness, and this is your main break in market structure. All right, what we're going to do is we are going to now value the range. Cool. If we value the range like this, okay, if we value the range like this, these liquidity pools, what's up with them? They are kind of a chart pattern, right? From here, like that. It's a chart pattern, right? Chart pattern at what? The wrong valuation. So is that a candidate for a inducement? Yes, there's a sell from up over here somewhere. Take out this low. But what about this one over here? Normally, yes, normally this is your point of interest over here. But look at this. Yeah, the Asian low over here. This is the Asian low, not this. This is the Asian low here with this low. What's that? Relative equal lows. Okay, so what's that? It's liquidity. Relative equal lows, liquidity. Price takes it out. Once it takes it out, once it has cleared all the liquidity out, there is an immediate buy. Okay, once it has cleared all the liquidity out, there is an immediate buy. All right, so this is in discount. You have everything you need. Everything's okay for you in terms of the valuation of the range and the placement of liquidity. Therefore, you can buy. Okay, that's one. That's another example. What about the next day here? This day, right? What we can see is we have the Asian high right there. Okay, then we have the Asian low. Where's the Asian low? Asian low is over here. Is it this? Yeah, it's this. It's the Asian low. Okay, that's your Asian low. So price takes out the Asian high. It makes a wick like this. Now the question is this, okay? Why is it making this wick? Why is it inducing this low? Here's the thing. Like I said, you see the small bodied candles here? Yeah. Small body candles, it drops, right? It drops below this. Fine. That is a good indication of inducement to buy. Fine. That's a buy. But you see, it goes up, comes down, and it goes higher. Now, with regard to this high and this low, remember when we spoke about that manipulative range in the previous video? This is the manipulative range. Can you see it anywhere else over here? No, it's only over here. Now, can you see something? This low, this candle exists in premium, right? So obviously, the bodies are what's important. Okay, because the wicks can be broker manipulated. One wick can be, from another broker feed. The one wick can be in premium. While for example, in my Pepperstone broker feed, it shows that it's in discount. Regardless, if the candle's body is in premium, this is still considered premium pricing. Liquidity in premium. There's your inducement. There's your buy to go up. Okay, there's your buy to go up. Now here's the thing. Once we go higher like this, right? If you go to the 4-hour chart, now this is 100% hindsight, okay? 100%. So I don't believe in, looking at price action when you don't know it and do all that nonsense. Nah. I learned from perfect price action. Okay, look at price, write it down, and then look at it on live, under live conditions. I don't believe in all that nonsense. In looking at price action as if you don't know what's going to happen, blah blah blah. Okay, I'm ahead of the crowd. Okay, so here, high taken out right here. Okay, with this high taken out over here. Okay, right here. Can you see that manipulated range? That manipulated range is over here. Now, with this being a manipulated range, can you see that price came and took out this low? Now, don't believe me, it's a low. Look at this. Like that. And look at this. This body, where is it? In premium, right? So, is this a low that we're going to consider? Yes, 100%. Right here. Okay, now we go back to the 15-minute and we will see where these things are. All right. So low, remember that Asian low taken out, price goes up, nice reaction. And what do we have? Remember this point of interest over here that we had earlier. Price can come drop, take this out. Look at these bodies. Aren't they like small? Aren't they, kind of small, like almost little to no, not little to no volume, but you see, it's like step-by-step action, right? Step-by-step price action. So it's liquidity. Can we take it out? Sure. Yes. come into this, right below this over here, come into that here, it's all block or propulsion block, and you can get that reaction. Okay, so that is all, guys. So I hope you guys can put some work into this, because uh, things change when the things definitely do change when your range valuation changes. Okay, things definitely does change, or do change, do change, whatever, when your range valuation changes. And once your range valuation changes, it's a different ballgame. Okay, like now, you saw, took out the H4 high, 4-hour high, and your range valuation changed, and now suddenly, right, all this low over here and all these lows over here, they become what? Useless, meaning price could take them out. Okay, price could take them out unless that's like a massive as reversal for it to be taken out later. So that I don't know, and you won't know until Monday, Tuesday, or Wednesday starts printing price action. And currently, as of this video I'm doing right now, it is Sunday, March 20th. All right, so that's all, guys. Like, comment, and subscribe. And like I said, I had an announcement. I'm going to be doing one-on-one mentorships, or one-on-one private groups, or private calls, or private memberships, let's say. Yeah, that's lifetime. Okay, so that you guys can have access to me whenever, wherever. Obviously, you're going to be bound by a non-disclosure agreement, a very, very, very strict one. I do understand if you don't want to join, or if you don't want to take it up. I could care less anyway. I'm just trying to help you, right? So it's obviously going to be a one-time payment, no monthly, no this, no that, right? And I'm also developing a trade helper, or entry helper, or trade helper, if you can call it, if you can call it that, whereby it gives you a signal as to, such and such has happened, this condition has been met. You can look for a buy, you can look for a sell, use your analysis to determine whether it's a continuation or reversal, and all of that. I'm still making it work. I mean, it's still under development. But yeah, that's the news I want to give you guys. Yeah, so if you're interested in the one-on-one, let me know. I'm not going to be incorporating it just yet. I'm going to give it some time and see. I got to think, I have to make it worth my while. I have to make it worth your while, because you're paying for my time, basically. I mean, I have better shit to do. Okay, so to be honest, I really want to help. And because I've literally gone through all this time and effort into knowing, into obtaining the knowledge that I have, I really don't want to give it to anyone for free, and I don't want to give it to anyone, at a cost that might make it seem not worth it. I hope you guys understand. If you don't understand, you can get lost. I don't give a shit. I don't give a fuck. Okay. Do you want to give me hate in the comments, bruh? I can give you hate right back, man. Come on. I'm doing this YouTube shit for fun and to help you guys. I could care less. Okay. So because I have my own thing to do. But anyways, that's not how I wanted to end the video. But what I'm saying is, if you guys are interested, hit me up on Telegram or on Instagram. And anything else I could tell you guys? Yes. Don't forget to like, comment, and subscribe. Lesson number 4 is going to be even more juicier. All right. So do the homework. And remember, if the market is algorithmic, your trading should be objective. Bye-bye and peace out.